Fine wine offers an alternative to more traditional stock market investments. So Inside Out joined Andrew della Casa, director of the Wine Investment Fund, for the journey of buying, holding and selling these very particular liquid assets to find out what makes a good investment wine. I start by asking Andrew to describe the journey the wine makes from vineyard to bonded warehouse.
We only look at Bordeaux wines, and these wines are, the grape is picked in the autumn, very simplistically. The wine is made in the spring. It's then put into cask, and it's kept in cask for about 2.5 years before it's bottled and then shipped. And one of the advantages that we use by using the bonded warehousing system in the UK is that the majority of the wines that we buy in our universe comes straight into the government bonded warehousing system at that stage. The advantages clearly of using a bonded warehouse is that it's the best physical security you can get, but also that the wine is kept in ideal temperature conditions because the warehouses have that expertise.
And there's a duty benefit as well, of course.
Yes, there are other sort of hidden benefits, if you like. One is, of course, that we don't pay duty or duty or VAT. Which means that the majority of the investment proceeds that we have, the monies that the investors give us to invest, actually goes into generating returns rather than paying VAT and duty.
32,000, are we all done? Last chance at 32,000.
The investment expert on the Wine Investment Fund team is Chris Smith, and I ask him how he builds up the right balance of investment grade wines in his fund.
Well, the most important thing we're looking for is a diversified portfolio, and that means a range of wines with different risk profiles so that we get the best returns in whatever happens to the market. That's the short answer. Actually, being a fund gives us a great advantage in this respect because it would take £250,000 to £500,000 to build a properly diversified wine portfolio. Which is beyond the reach of most individuals, but by coming through a fund, we pool individuals' cash and we're able to create those diversified portfolios for everyone within that particular part of the fund.
You say that this asset class, fine wine, has outstripped the performance of commodities like gold and oil and various other indices over the past 8 years, and yet market prices recently, along with your fund's performance, have fallen. So what do you tell investors about balancing the risks inherent in this investment class?
Yeah, it's really important to stress to investors that this is a medium to long-term investment, and we have a 5-year time horizon. And the reason we've selected that is that we've shown historically wine has never lost money over any 5-year period that we've been able to find. And that would certainly not be the case with equities or gold and oil, where lots of 5-year periods have seen substantial losses historically. So we say to investors, you must be prepared to leave your money in for a lengthy period. And we think, yes, the market has lost money, as has our fund in the last few months, but we think that over time, someone who invested just before that period will still see good returns. And someone investing now will benefit from the fact that prices actually have come off where they were a year or so ago, and so you're buying in at a lower initial valuation. It should benefit your returns at the end of the period.
So what kind of returns are investors getting right now?
Right now the market's relatively flat. It's basically hit a bottom at the end of last year and has consolidated. It hasn't done anything yet this year, but we're still expecting to see returns of around 10% calendar year 2012.
Back in Andrew della Casa's London office, I wanted to know whether taste spells profit. Does it always fit that a great wine to taste will be a great wine for profit?
Ah yes, taste. Well, from the demand side, there are actually two categories of demand. One which is very much taste-driven, but the other which is actually brand-driven. And by taste I mean, and I'm going to exaggerate to make the point, a Margaux drinker will never ever drink an Haut-Brion or a Lafite. From our point of view, the fact, in fact, that it's even wine is in a sense irrelevant, because it's the underlying characteristics of certain types of wines that we've identified which make them investment-grade wines for us. We actually take data on these wines from the marketplace, and there's a lot of data out there. It's just that no one's really using it the way we do. We put it through our various screens. Don't forget, we are investment managers. And at the end of that process, we end up with a list of wines, which we then do a relative value analysis on, which then gives us a buy, sell, and hold list. And if we look at the result of that process, we now have something like 350 lines of stock that we stock pick from. That's worth about £6 billion. And if you look at those wines, you then do say, yes, those are the top 1% of Bordeaux wines. But it's not that we say we only want to invest in the top 1% of Bordeaux wines. That's the result of our investment process.
Andrew della Casa, Director of the Wine Investment Fund, thank you very much for talking with us.
Not at all. Thank you for having me.